I have some sharp questions for you this afternoon. I'm joking, don't be scared. Wow, it's like giving a lecture at the university. What a privilege. How many mics do we have?
Two, I think.
Two? Okay. So, two at a time. Good afternoon, ladies and gentlemen. It is great to be here in freezing Zurich. I personally love the Swiss crypto community. I think it's one of the most active, vibrant, and fun in the space. So thank you very much for having us here today. By way of introduction, my name is Valeriya, and I run partnerships at 1inch, which is the largest DEX aggregator in the space, and we provide the best rates when you swap. This is my only line of content for today. And for the panel, we are going to be discussing the meme coins on Solana, what lies ahead of the Trump coin. And now that I've got your attention, I'm happy to introduce you to the wonderful speakers we have today. And if I were in the audience, I would be really curious what these wonderful people have to say. Most of them are my friends for a long time. And these are not the people that got into crypto yesterday because of the hype, but the real OGs of the space that predict the future of finance and shape it with everything that they do. And we have a really great mix today. We have Aliya from a very crypto-native Signum bank. We have Alain, the GSR and market-making guys, the people who control the liquidity and the money flows. Leeor from the VC, also the money part, which looks for the outliers in the space and funds the next unicorn. Maybe that would be one of your projects in the future. And Dominic, a little bit more traditional player, nevertheless still very technologically advanced from Bitcoin Swiss. This was a high-level overview, but I would love to each of you to introduce yourself in a bit more detail, your company, and one word, no explanations, the crypto in 2025. Let's go. We can start with you, Dominic.
All right, I start. So hey, if you're in Zurich, I'm Dominic. I'm heading the research department at Bitcoin Swiss. Bitcoin Swiss is one of the oldest crypto financial service providers. We offer basically staking services, various custody solutions, peer-to-peer loans, for instance, brokerage. And we are also currently heading into the asset management space. For instance, we launched a stocks digital asset blue chip index, and we maintain a very product-capable crypto taxonomy. 25, one word, bullish.
Thanks. Over to you, Alain.
Hi, my name is Alain. I run the business development team in Europe and Middle East for GSR. GSR is the oldest crypto-native market maker. It's also a multi-stage investor. It only deploys its own money, so we have a bit of different perspective. I would say one word for this year is going to be regulatory clarity.
That's two words. You cheated, Alain, but we forgive you. Over to you, Aliya.
Thanks. Hi, Ethereum Zurich. So glad to be back here. I'm Aliya Gupta. I work with Signum Bank. We are we are the world's first digital asset bank back in 2017 when we started working together with FINMA, and then in 2019 when we got our banking license. And so today we work with probably 70% of the top 100 listed DeFi protocols and projects out there. So really, we like to think we're the banker to the space. But obviously, we're not just another bank as the many others out there. We are really focused on growing the adoption and engaging with the ecosystem as well. And with my other hats, I work with Crypto Mondays Zurich and with Women in Web3 Switzerland, and both of which are also partners of the conference here today. So really happy to be here.
Thank you.
Oh, sorry, my word. And my word for 2025, adoption.
Hi everyone, my name's Leeor Groen and I'm a managing director at Spartan Group. Spartan Group is actually based with its nexus out of Asia. We have our offices in Singapore and Hong Kong, and I have the privilege of being Swiss-based. I've been here for the last 8 years, an active member of the ecosystem, so some familiar faces here in the room, and it's great to be back at ETH Zurich. Spartan, we invest and advise in the industry, so we run several investment strategies. We have a liquid hedge fund, multiple venture funds, and an early stage partner to many projects within the ecosystem. We also work with projects on their token launches, going to market, and active M&A deal maker. So we see everything from first check-in to projects all the way through to helping entrepreneurs exit. We're actively working with partners at all stages. So I'm really excited to be back here, and obviously some good people here on the panel to go deeper. My word for this year, a little bit less exciting or directional as these guys, I would say roller coaster.
Wow. Okay. So bullish, adoption, roller coaster, regulatory clarity.
Regulatory.
Yes. Well, just regulatory. My first question, well, obviously with the Trump new presidency and the recent execution order in the US to aim to have US as the crypto capital of the world, what specific regulatory changes do you expect to see in 2025 and how they might impact both startups and established crypto firms across the globe? I see Alain just kind of with your regulatory clarity.
So compliant, he doesn't want to talk about it. That's a smart man.
Yeah. Dominic.
Apparently, I start again. I guess it's important to highlight again, like how big of a landmark event the US elections are for the crypto industry overall. I also think, or we from the research team also think, it's not sufficiently priced in yet, the impact it will have. Because basically the largest economy is now like full on institutionally embracing crypto, while it had like tight restrictive oversight up front. So we think this will be a huge regulatory unlock. And honestly, I think it will also onshore a lot of crypto activity again into the US. And I think this might also lead to stimulate other jurisdictions to get more progressive again when it comes to regulatory frameworks.
Okay, bullish. Any more takes on?
I'll jump in quickly just to add to this. So I think that aspect of it is clear. I think there's a large capital market in the US that's now been opened up. I mean, to make it specific and concrete, I think the first things that we've seen is obviously the transition of the SEC and the role in enforcing a lot of the crypto activities and, let's say, inactivities or illegal activities that were alleged over the many years. So I think the first thing that happens, and we've already seen that, is a lot of the Wells notices or the enforcement actions from the Department of Justice have immediately been at least put on hold, withdrawn, and that just has fundamentally shifted the way in which, many very early adopters in this space, entrepreneurs, founders who took a lot of risk back in the day to actually create, the protocols that we now talk about as household names in this industry, a lot of the things that they were engaged in is no longer seen as negative. It's really seen now as an opportunity to replicate and learn from many of the things that happened over the years. So, from the regulatory mindset, I think that idea that people can now engage with Uniswap, right? I mean, let's not forget, Uniswap was dealing with so many issues. Ripple has been fighting the SEC for God knows how long, and I'm not promoting any of these tokens, coins, or ecosystems, but really just referencing the fact that for all of the attention that we've had for developments in this space, many of these large-scale, multi-billion-dollar FDV ecosystems and projects were still dealing with the basic foundational right of what is this ecosystem and is it compliant with the US? And the US is 60% of the global capital markets by dollar value. And as soon as you've now removed the ambiguity and the illegal nature or alleged illegal nature of many of the projects dealing in this space, it creates this whole windfall, which is what Dominic's talked about. So we're really excited about that trajectory. And I think that fundamentally changes the rules of the game, not just for many of the DeFi native projects and protocols, but also for many of the more centralized CeFi players like Circle, like Bullish, other companies who are planning for their IPOs and looking to tap into regulatory capital and really scale up this entire industry. So we're incredibly excited about these developments. I think it fundamentally changes the entire landscape for our industry, and it's really just the beginning, to echo Dominic's sentiments.
I mean, if I can also add something, and it's probably going to be a bit the roller coaster, to take up what my colleague already mentioned. I think it was very good for the vibes. I mean, when Trump won, we were like at 70, we teleported up to 80, and I think now we have a lot of expectation in the market, and there's also some probability that it's going to be disappointing, and we're going to see the roller coaster mentioned by my colleague. I mean, one thing is anti-regulation is going to be implemented. It's going to take some time, and I think like migration, taxes, and tariffs will be like on the forefront before actually crypto is getting more clarity. Additionally, it's probably going to be very good for the Dino coins, so the tokens that already have been out for a longer time, because when we look at all the regulatory stuff and we have the right people in place, but it's still going to be a lot of discussion around what does actually decentralization mean and all that kind. So I think it's like the market already discounted a lot of hope. So if the strategic reserve is not coming and the regulation is taking a bit long, we expect it's not going to be super duper bullish.
Interesting, because you talked about regulatory clarity and then also about the roller coaster that we can expect in the months ahead. Because I think when you consider, okay, now Trump's in, and that means that things are better, we can, start innovating on projects and so on. But is there clarity yet? Are we going to still be sued? And then Trump launches his meme coin. And so you're like, okay, so, gates are open. We can do whatever we want. Do we need to test anything? Do we need a lawyer? Just ship, right? It's scary, honestly, a little bit, because we've spent the last 8 years trying to kind of draw some sort of guardrails around the industry, especially in Europe. One can argue to the extent to which that is good or bad, or how helpful that is really to innovation. But at least the efforts have been there. And now with the gates just sort of flooding open, it's, to Leeor's point, it's going to be a roller coaster of what we're going to see in terms of the innovation, because of course it's always good for innovation when there's no regulatory hurdles, but also a lot in terms of like consumer protection and investor protections, which is also really important, because we all know, everybody in this room knows how much the space suffered back in 22 when so many retail investors got their fingers burnt. And some would argue, even today, we haven't seen a full recovery to the extent of what the kind of participation we saw back then. And this, as it sort of unfolds in the US, and I think they've given themselves a one-year timeline to come up with something for this SEC working group on crypto and so on. So I guess my take is a little bit cautious on what emerges from the current market sentiment.
Thanks, Aliya. As you correctly mentioned, the gates are completely open right now. Expect anything. And some analysts have projected that the overall crypto market could surge to 7.5 trillion by the end of 2025. Just a reminder that as of now, it is around 3.37 trillion, so nearly double or more than double by the end of the year. Do you find this projection realistic? And what factors do you believe would be the primary for growth?
If I can start, I think the easiest one would be like the US declares a strategic Bitcoin reserve. We're probably just going to see Bitcoin going up to 500 or even more. So we're going to be very close to that. I think that's a low probability event. And then the other one is actually a much faster than expected implementation on the regulatory side. The one I specifically mean is more clarity for the big money manager, like Morgan Stanley, Bank of America, Goldman Sachs, all of them. And BlackRock is already guiding people to have asset allocation of 2%. If they would go up to 10% or 15%, and then basically diversified across of that, that would basically lead to a huge money flow coming into it. Otherwise, I probably would say the odds without one of these two happening, that we end up 2x on the market cap until the end of year is rather low.
Mm-hmm. Is there anything you want to add? Yeah.
Yes, for sure. So in December, we also launched an Outlook piece with a couple of predictions. And based on our risk models and long-term exponential growth models, we had a conservative floor target of 10 trillion. So I guess like 7.5 is rather on the even on the more conservative side. And basically, again, there are like two catalysts for it. We are currently matching again this cyclicality of Bitcoin, of the US election cycle, of the liquidity cycle. So there's this notion of there is some onset of an easing cycle when it comes to monetary policy in the US. And then obviously institutions, as you outlined, they're still like around 60% of the big players still not able to allocate into these ETF vehicles based on compliance restrictions or firm-wide policies, for instance. And this should resolve in the upcoming months, and then I guess like we will see like an acceleration in institutional flows.
Thank you, Dominic.
Yeah, so I think there's two aspects of this that I think is important for me to clarify. And I like the point on BlackRock and Larry Fink talking about 2% allocation and what that means. I mean, of course, if people start allocating 10% and all institutional managers and all large-scale funds are doing that, I think we're talking hundreds of trillions of dollars at that point, right? So I think we need to remember the proportions of what seemingly little numbers in traditional capital markets can actually do to influence the market cap in our industry. And I think the point I would reference here was it seems like a big number until it's not. And 7.5 trillion, I mean, even just in November and December, there was Blockworks and the Block putting out articles. I mean, 1 trillion was added in those 2 months. It was a 30-day period where 1 trillion was added alone. I mean, right, and before the election, market cap was at 2. Right, so I think, again, thinking about what are the catalysts that really fundamentally change and drive this, it doesn't need much to really fundamentally change the way in which value is brought into this industry. I think the bigger topic that we have, and the reason why it's hard to make these predictions, is fundamentally I believe over time this industry will continue to grow and basically outperform most other asset classes in terms of growth rates. The question is, like, where is it going within the industry? And today we've seen Bitcoin obviously break out. That's been counterintuitive to a lot of the previous cycles. Typically it starts and then very quickly is followed by people moving into altcoins, and you have the altcoin season. Here we've seen, since basically the Bitcoin halving last year, a sustained Bitcoin outbreak, and there has not been a corresponding matching of the conventional altcoins, but really a lot of focus and engagement in meme coins. And then depending on how you account for the Trump coin is a whole nother story altogether. So we're seeing a lot of firsts, I think, in this cycle, and that really matches, I think, the first key points, which is people are coming at this from a different perspective. This idea of 7.5 trillion, it seems like a big number, but realistically, in 1 month we added 1 trillion. So if you just continue on that trajectory, easily you get there. So I don't think it's a straight line ever. And I think that's the whole point of the roller coaster, is these things, they seem like a distant target, or maybe high, maybe low. Realistically, even if we do hit those numbers, will it stay there, sustain there, and where within the industry will it be? I think all of these questions are legitimate and valid. And what I expect to see over the next years is, again, just because Trump can launch a coin and still be president and do all of these things, doesn't mean everyone can do that. And I think we're going to find that out the hard way. If anyone remembers the last Trump administration, there's a 3 to 6 month window where every time there's a new press secretary, there's a new person in a new role, and there is a roller coaster there as well in the way that he runs the government. So I think there's so many variables, and all I would say is, for us, backing the fundamental enablers and aspects of the technology is follow what actually makes sense. And we can spend, and we will, I'm sure, talk about AI and focusing on a lot of trends that are coming. But really, it's finding the pockets of opportunity within the industry rather than specifically on what does 7.5 actually mean.
Leeor, small follow-up. If we were to hit the 7.5 trillion target, what would be the reasonable Bitcoin price target, in your opinion?
Actually, that really touches on what I was trying to allude to. So from our perspective, I mean, we focus on all assets in the industry. So we have focus on DeFi, infrastructure, gaming. We really cover all aspects of Web3 investment opportunities, landscapes, and that touches on literally everything from B2B to applications and everything that's happening in this industry. Big believers and supporters of the Bitcoin ecosystem specifically. I think that there's a natural path, 500,000. I obviously would love to see that. I don't know if people can psychologically manage that, just in the way that human behavior and traders operate. But of course, these are things that we would see. I always hesitate to give a specific Bitcoin price target, but I do think that the large growth of this industry will be driven by that leader, yes.
Great. Aliya, my next question to you would be about institutional adoption. But psychologically, do you think we could manage like 500K per Bitcoin? I could manage that. Raise your hand if you could manage that. Yay, okay, amazing.
I'm shocked that a room full of, at a crypto conference agrees with this number.
The people not in this room, but yeah.
Right, okay. Well,
I mean, but to your point, it is really just a doubling of Bitcoin that already gets us more or less to the 7.5 number, right? And as Ethereum picks up and we see a little bit of a rally with the alts as well, like 7.5 is really not that far out of reach, even though psychologically it feels like a really big number. And also like with Bitcoin, because we've crossed this at 100K was this psychological barrier for a really long time, and now we're kind of seeing, maybe it's a bit early, but we're kind of seeing how it's becoming like a resistance, like a floor in the trading price. Like we go up a little bit and come back, but 100K seems like the right number for Bitcoin for a little while at least, and that means that a doubling isn't completely far out of people's, I think, projections. And I think Galaxy put out a study as well, where 185 by the end of this year is what they think for Bitcoin.
Okay. Aliya, Signum is very much of an institutional player in the space, and you also mentioned like institutional adoption globally, and we've seen that over the years, multiple talks and many action has been taken. But for 2025, how do you foresee institutional adoption evolving?
That's a good question for me, because I also said adoption is like my one word for 25. I think institutional adoption, it is always just a journey, right? And I think Trump being in maybe gives America a little bit more flexibility to come play as well. But the banks in Europe and in Asia, I think, have already been experimenting for a while. Like there's been a lot of different studies out there. And for example, the duplication of this curve pool with the Marina project, or Project Guardian with UBS and DBS. You know, all of these, but it's hundreds of millions of dollars worth of bonds that have been tokenized. And America entering the game, of course, gives us a bit more inertia? No, a little bit more acceleration, maybe. But I think fundamentally, TradFi and institutions, we do work slower. Like launching a simple product, even in a small, relatively nimble bank like Signum, takes a little while. It would be maybe, I don't know, 2-3 months to develop for a DeFi project, but for us to get it through all the regulatory checks and all the security checks and all of the levels of compliance that we are obligated to go through, a simple product that really shouldn't have taken that long, I worked on one, and I'm a little bit sorry that it took this long, is at least 2 years, right? And what we're talking about here, particularly with the adoption of blockchain, on one side, we talk about the asset class. So are people going to give their client, are banks going to give their clients exposure to Bitcoin? But on the other hand, it is engaging with the technology on their infra stack level. And that's a much slower journey. So I think, of course, it will happen. It's happening already. It's been happening for the last 4 or 5 years. But I still don't see that changing overnight. That is just, it's designed to be slow and bureaucratic, because that's also inherently what has made people trust it for the last 500 years.
Yeah.
I think you ended very well to actually break down adoption, because you can see to a certain point as a meme, because what do we actually mean by adoption? I mean, the most interesting, I think, the topic we all like is like cryptos and asset class, like Bitcoin, ETH, and all the other funny coins. We all want to see their price going up. I think that's what's just going to happen. I think for the blue chips coin, it's just going to be a diversification argument, a higher sharp ratio. And then the other thing is like the technology as a tech stack. I mean, on the bank side, you can make the argument that putting a blockchain, you basically can save your mid and back office in most of the banks, and you're going to have a lower error rate, which is very interesting. But I think for most of us here, if we're not on the tech side, is very boring. And I think something else which is also a bit overseen is like stablecoin, which is actually so far the most, the best use case. I think that's just going to increase. I'm going to see a world where like every bank is going to have their own stablecoin, and then if you think about it, it's going to act something like a CDS with different counterparty risk reflected in a discount or a premium of the price itself. And then something else where we already see some movement, and also taking BlackRock again, is like bringing the traditional securities on chain and making them much more accessible, because I think we all have access to one or multiple brokerage, and we just can buy whatever we like, or most cases whatever we like. But I think that's still not possible for most people in the world. So actually bringing real world assets on the chain is also a very interesting use case.
Yeah, we're going to touch upon RWAs in a bit. Well, Dominic, you're very bullish for 2025, and
Yes.
you do a lot of research, and everything we discussed so far looks very much, optimistic, the overall outlook. But what about potential risks or challenges that stakeholders should be aware for this year?
Obviously there's still some looming risk, Maybe can I add something on the institutional part, if you don't mind?
You may. Yes.
So what we observe is really that institutions now also figured out that Bitcoin and its peers is really a very interesting asset class when it comes to diversification. If you think about correlation across the last 3 years, it's by far the least correlated asset compared to the major asset classes. Then you have this notion of like diminishing volatility, basically where also institutional adoption adds even more fuel, because think about rebalancing effects of these ETF or portfolio allocations. So as price goes up, they rebalance out and vice versa. Then you have a lot of hedge funds now being active, which like usually tend to dampen volatility even further. So this is something that is kind of very, very interesting, and the institutions understand currently that they might want to have an allocation in this emerging asset class. On the challenges or looming risks ahead, it's like basically nothing new. We have still geopolitical tensions can be a bummer, to be honest. Then there's still like the inflation in the US and in many other countries is still not sufficiently under control. That's why we still have like rather high interest rates in the US and in other countries. And obviously, there are a couple more challenges, but we think that overall the odds are rather low that something like really bad is happening when it comes to price performance, especially given the notion of this diminishing volatility.
Maybe some risks for institutionals entering the space, like is there something for them? If we separate, like, let's say the regular retail investor and of course a bigger company.
Nothing that I could see, to be honest. I mean, there's this notion of, we have now 2 institutional assets in the US, right? And there are some concerns when it comes to how much supply is in their pockets. This might be less concerning when it comes to Bitcoin because it is a proof of work asset, but might become concerning when you think about Ethereum because it's a proof of stake asset. So if there's like institutions holding like suddenly like 30%, this might really become a problem. And maybe since we are on an Ethereum conference, in our outlook, we also outlined that this regulatory unlock that we expect should be disproportionately beneficial for Ethereum for 2 reasons. A, we basically project that there will be institutional roll-ups because it's really, we have prime conditions to deepen blockchain integrations for these institutions. Think about built-in compliance and KYC features into an institutional roll-up. We see first moves from Deutsche Bank in their pilot, for instance. And the second one is we expect like really swift approvals of ETH staking ETFs. And this might really basically accelerate the ETF flows into Ethereum that were largely muted, to be honest, but got some traction with the US elections. And the reason is obviously you have a huge opportunity cost if you allocate into these ETFs when you don't get your staking rewards back.
Right. Leeor, since you have the microphone. I know a lot of VCs these days, they turned away from some of the crypto projects and now they're looking at AI plus blockchain world. Will this present an opportunity or is it actually a security nightmare that could evolve?
Yeah, so I mean, great question, and I think it's a great week to be talking about AI generally. Obviously, I think the rules of the game have fundamentally changed, and all of that really strengthens and emboldens, I think, what we're doing and building with core web infrastructure, Web3 infrastructure in this community. And I think that those founding principles and tenets of decentralized web, I mean, that is the core of what's needed for people to actually participate in the AI-driven economy and future, so that no matter what is happening, you're not susceptible to, as we're seeing now, some of the government politics, forms of competition that's happening between things of national interest that have, you know, to be very honest, nothing to do with what this core technology is and the well-being, especially of people here in Europe like us. I mean, nothing to do with us, the rivalry between the US and China for AI dominance, right? The whole point of this technology beyond the invention and advent of Bitcoin, and why smart contracts and Ethereum brought so much to the ecosystem was so that we wouldn't be dependent on all of these other things. Now, I think it's fitting that we're also here in Switzerland, right, where, again, I know we're at an Ethereum conference, but there are ecosystems like Definity and also Zurich-based project who have for a long time created this notion of what is Web3 AI and what is a decentralized cloud network and system. And I think that those topics now, we're finally starting to understand in the mainstream why it's so important to not have leaders in the US, leaders in China who are owning and operating not only the apps. Of course, anyone can develop an app on open source technology and start this. It's really the distribution and who's controlling the back end and the infrastructure, right? And I think that the topic that we're seeing now with all of the AI models is historically everything's been done and developed proprietary and used for their own use. The big development over the last years was the open sourcing of the AI algorithms themselves, so the logic and how they're actually come about it. And what's happening this week is we've seen that actually you don't need tens of billions of dollars to train AI to actually be competitive in this space. And again, if this conference had been 1 week ago, you would have laughed me out the room if I said there's going to be some guys in China who can produce and outcompete OpenAI with $5 million in 6 months. And the way that they've actually put out their community notes and governance around the logic and what they've built and how they've done it really just shows the exponential nature of this technology. Now, all of that, of course, is a lot of macro big picture. What does that mean for this industry? It's really now the opportunity to say, if we can do the AI open models on Web 2 infrastructure, what is possible then, and what is the more secure way that I would feel comfortable and be able to sleep at night knowing that my data and information is not being sold off and managed in different ways that I don't approve of, but really managing this in decentralized way, which is why most people that I'm aware of actually got into this industry. So I really think that, again, you don't need $50 billion, $100 billion thrown at AI just to say that we're doing it for you to be competitive in this space. And no one bootstraps projects better than this ecosystem, which is founded on decentralization and governance around that. So incredibly excited about the opportunities here in front of us once we filter through a lot of the noise and the challenging realities that people have to deal with and nursing their wounds with NVIDIA stock and so forth. But those things are irrelevant to what's happening on the ground here. And really, I mean, anyone who's building in this space and not considering elements of AI into what they're doing and how they can basically bring that into a decentralized ecosystem, I think is focusing on the wrong thing at the moment.
Yeah, Leeor, small follow-up, but how do you filter out the noise? And how do you distinguish between a short-lived hype and a long-term project?
It's a great question. I mean, I think it's been the same. I mean, I've been in the space full-time since 2017. We had the ICO booms, and I would have given you the same answer then, right? I think it's really at the end of the day, no matter what you're doing, you are ultimately backing and working with people, right? And that's as a venture capitalist, as a partner to projects and founders, ecosystem participants, you are working with and trusting people to actually make and develop things. I hope that will change over time and we have more AI code being written than people, and that fundamental dynamic is also interesting. But basically, it comes down to working with the right partners and ecosystems. And I really think that that's why specifically here in Switzerland, we're in prime position, because there is a lot of trust built into the institutions, the talent, the types of entrepreneurs and people that are building here, genuine software engineers and developers that understand technology and want to build a better future. And that's why I'm incredibly bullish. So I think if you follow and honestly look at yourself in the mirror and say, I really back what we're doing here, the people, not that you get it right every time and that smart people always do the right thing, but more often than not, you'll be doing and spending your time on the right opportunities. And that's how we filter this. Like, would we still be comfortable holding this in 10 years when no one's even remembered what the word AI is or whatever DeepSeek was, right? It was like, we backed projects because we believed in the founders' vision and their credibility to go out and actually make a difference.
Thank you. Well, open question, are real-world assets still a thing? Question. Of course, there was a lot of tokenization and a lot of projects behind that. But what role do you see this trend playing out in a broader sense for 2025? And perhaps you could name a couple of asset classes like real estate or bonds, art, whatever, which see the most of disruption for this year.
Maybe I can start with this one, because at Signum we've focused on tokenization as one of the core verticals of what we do, and this has been literally since the inception of the bank. And it's really been a journey, right? So since 2017-18, we've been trying to figure out how to use existing regulation to tokenize and represent these assets on chain. And it's amazing to see how this has evolved, because we started just with like wine bottles, then we moved into art. We tokenized a Picasso painting, which was kind of the classic, put into an SPV and then tokenized shares of the SPV, but it still made access to owning really rare art accessible to kind of it's still for qualified investors, of course, but still maybe for somebody who doesn't want to spend $5 million on a painting, somebody who wants to spend 5,000 francs on it can still have a Picasso as a part of their portfolio and diversify their holdings. And from there, we've really moved forward. So we worked also with Matter Labs and Fidelity to help them bring a part of their treasury on chain, and then also integrated with chain linked to have real-time NAV of these assets. And now these are all just like small steps. Each project that we do, I think, is really just taking one step forward in terms of bringing this vision of having the whole world tokenized to reality. And so one of the more recent projects we did was with Fasanara and Float. So it was working with private debt of Nordic B2B SaaS entities and providing this as a simple token where you have access to a whole portfolio of B2B SaaS or whatever, as a way to just diversify your portfolio, but without all the admin, without all the overhead that typically comes from this sort of investment. And I think just seeing this innovation happen, I think it's slow moving, right? Like, I'm not saying that this is like an overnight journey of any kind, but working with our regulators to kind of really have this democratized access to assets like this, I think that is still where we see the biggest hurdle in real broader adoption of this. Within big institutions, I think it's clear that you can do this, it works, and it's happening more and more. But I think for a lot of people, including myself, there's been this like vision of how blockchain can really bring these assets to the layman. And you talked about maybe access to BUIDL being a way for kind of a layman to be able to have access to US traditional securities through the crypto market. And that is, I think, one of the bigger risks I see for Europe, for Switzerland, because obviously in the US, we're seeing this open flood of innovation now, and everything's just going to go on chain, and there's a lot less regulatory concern in some ways. But in Europe, we're being really cautious and really careful. And of course, you need to protect the investors. That is, I think, everyone's concern as well. But it's something that I feel is, not moving as quickly as we really could be.
I mean, I would try to tackle the question from like a demand side. I think the moment we understand that we actually like dollar on chain, like Tether, like USDC, the next thing is, especially if we like in an environment which is non-zero interest rate, the next thing is going to be like yield. So I would say every kind of instrument that provides you yield. I mean, the one thing is like some kind of treasuries. I think credit that you mentioned is going to be the next stuff, just going down, and the credit risk. And you also see like some very other alternative ways that you won't get exposure to yield. I mean, one interesting project is Ethena, which is essentially like a collateralized or tokenized is the better word, basis trade, which is otherwise very hard to understand or implement, but that's some very interesting combination from TradFi and on-chain solution they have. And when we just look at asset classes not likely to end up on-chain very fast, I would say real estate. In Switzerland, specifically for the simple fact that you have something that is called Grundbuch, which is basically owned by the local government. And as long as that stuff is not really digitalized and you can read and write in it, you always will have somewhere in the value chain a break. So if you get pitched stuff like that, just stay away. Yeah, I would say that's it. And then the other stuff is like security and all that stuff. But I think that's just going to happen through the the big exchanges, because they currently hold like some paper certificate somewhere in a bunker. Basically putting that in blockchain is going to be very interesting. I mean, projects like Aktionariat already in Switzerland are doing that. And just to be a bit patriotic, I think in Switzerland, not for the EU, but I think we have one very nice thing. People like Swiss franc because it's very stable. So I think there are different kind of projects like Frankencoin happening in Switzerland, where we basically hopefully at one point get the support of the SNB, because I think everywhere around the world they like dollar, but they also like Swiss franc because it provides stability.
Dominic, if you want to talk about RWAs a bit more, or have a question for you.
Okay. Yeah. Let's go.
You always get a surprise questions from me, you know.
Okay. Again, we are incredibly bullish on tokenization. The elephant in the room is basically stablecoins, mostly tokenized dollars. There's this nice chart from Nick Carter's recent report, basically outlining the relative share of the dollar in different vehicles. When you think about institutional loans, institutional debt, or FX reserves, the dollar is usually flowing around like 60% of share, and in stablecoins it's like 95%. So this might even be amplified now with Trump, or it might also signal that there's an opportunity for another fiat currency when it comes to tokenization, maybe the Swiss franc, which is honestly a great fiat currency in my view. Then all the other topics, I think the largest growth in our view should likely happen in stocks and equity. It's very interesting, while a lot of people are unbanked, like around 20% or something like that, it's actually more than 80% are unbrokered. So if you bring stocks and equity markets on chain, it would be like highly inclusive across the globe. And as we outlined before, like Larry Fink is very vocal about like accelerating like tokenization of bonds and stocks. So this is something where we see like a large opportunity, to be honest.
One rebuttal point here, just to spice it up a bit, I guess, but this notion of like unbrokered, I think it's an important distinction to make, because retail is one segment of the market, institutional fundamentally different. Now, the basic concept that everyone wants to hold and manage in a secure way and be responsible for their own private keys, of course, in a room at a crypto conference, especially an Ethereum conference, makes sense. As soon as I start thinking about the practical implications of that, my parents, my grandparents, holding and being responsible for their own things, let alone my kids and the next generations to come, it's a fundamentally different understanding of what this actually means. So like 80% people are unbrokered today, especially in places like Europe, North America, because they don't want to deal with brokerage. It's not because they haven't had access to be able to go and open a Swiss quote account or an equivalent in their local markets. It's all of these reasons that stops it, is because people don't have the financial ambition or literacy to handle and manage things themselves. And of course, crypto is not just an investment instrument. It's not just another stock or capital market product. It is money, digital, all of these things. And we take it for granted that people actually want to engage in that and secure their own private keys and. Reality is most people don't, in my opinion. And I think that we're going to come up to this continuous balance where us in the crypto industry, it's a bit of an echo chamber where we talk about, imagine how big if and when everyone has this. I think the real lever is still with RWA on products like Biddle and institutional capital flowing in, because that's where the actual value add comes from tokenized instruments, and it's on large-scale institutional capital, and I really see that as being the growth leader. Everything else is an incremental development, and the reason why we are so big and ambitious about this space is not for incremental developments, it's really exponential opportunities, and we're focused on the institutional adoption of this industry.
Thank you. We're running out of time, but I have two quick questions, so very quick answers, and I also want to leave one or two questions from the audience, because I think everyone was great listening to us here today. Thank you for that. The next cycle, will Leeor use AI tokens, RWAs, all the trends we've spoken about today? What will lead the next cycle, Dominic, in your opinion?
Tough to say. I mean, it's also hard to be non-consensus here. There are a lot of great sectors or key focus areas that are super interesting, like be it AI, DeepIn is super interesting. I'm actually also still highly excited about prediction markets, to be honest. And Polymarket does quite well in the post-election environment. There's still like large volumes and open interest. I thought it would dump even more, to be honest. And then I think like what I recently checked is I think derivatives, on-chain derivatives might have a good opportunity if you think about when it comes to spot volumes, DEX to SEX ratio, we just had an all-time high. I think we are now above 20%. When it comes to derivatives, it's just 10%, and also in absolute terms, derivative volumes are lower on-chain than spot markets. And usually what we see in TradFi, usually derivatives is around 5 times higher than spot, and there might be like also some growth ahead.
Awesome. Prediction market. What did you just say? Deepen the AI and derivatives on chain. Right, Alain, 10 seconds.
Yeah, I would say deepen, and especially like decentralized compute, because everything, all the blockchain stuff, all the AI is normally just running on a few AWS server farms, and we actually have no way to see and verify if it actually gets executed what we think it is. So I think that's a very interesting vertical that is completely missed at the moment.
Okay. Aliya, 5 seconds.
Less than Alan. For me, I would say yield-bearing stablecoins. I think it's been a long time that the yield from traditional assets is not being translated onto on-chain stablecoin assets. So I think that's something that's going to be seeing some growth, and I'm also very bullish on Deepen.
Thank you.
Yeah, so I agree with Alain here. It's, I mean, not necessarily the physical part of it, but decentralized infrastructure networks, decentralized cloud compute. I mean, this is really, I think, one of the most unspoken about things in the whole, everything I mentioned around the AI challenges and opportunity set. And then the other one, which I'm glad no one else said it, so I'll stick by it, and really emphasizing the roller coaster ride that we're on, but AI. I do believe this is transformative. The opportunity set here is a completely blue ocean, blank page, and we will see some of the most exciting things happening in that side of the industry over the next 3, 4, 5 years.
Thank you. Well, I'm really sad because I had another spicy question to ask, but you could do that in the back of this room. And thank you very much, everyone, for your participation and active attention. Let's give a round of applause to our speakers. Thank you.